Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck and Paul with you on a busy day. We got Tucker here as well because, listen, there's just too much for us to get through on our own. And so we'll kick things off with a discussion of some earnings from last night. Microsoft and Google, two of the biggest companies in the world, two of the biggest companies in the S&P 500, both reported earnings shortly after the bell. And when we look at where those companies stand today, Microsoft stock thus far trading down about 1%. Google, or rather Alphabet, trading down almost 6%. Let's start with Microsoft, just being the bigger company at the moment with a market cap of nearly $3 trillion still. They reported earnings, net income up 33%, but the stock's still down about 1% today. How come?
It was a pretty solid quarter, Chuck. If you look at the earnings metrics, you mentioned net income up 33%. Their revenue was up about 18% at $62 billion for the quarter. It seems as if some of the sell-off could be related to the AI growth that they were looking at here. The one notable thing that I did find from the earnings report is so many of these companies, Chuck, are encouraged to mention AI as many times as possible over an earnings call to point to its potential future growth and impact on the valuations of their stocks. So you're seeing a lot of leadership speak about it. The one thing that stood out with Microsoft is they actually spoke to what type of impact it's having on their quarterly figures. So one specific segment of their business is their Azure cloud computing division, which saw 30% growth over the quarter. 6% of that growth came from AI, which was double from the prior quarter. Now, these numbers relative to a behemoth like Microsoft, it's not a huge impact, but certainly a reasonable impact. But perhaps the sell-off that we're seeing today is a tribute to the fact that it might be a little bit slower going than investors may think to incorporate AI from a profitability standpoint with Microsoft.
Yeah, and look, this is clearly not a company that is shrinking or seeing any kinds of problems, generating revenue or profit. It's just, it's one of these situations where if you look at their metrics and how expensive they are, they're trading 39 times earnings, 36 times forward earnings, which, by the way, you do the math there and it says, okay, they're basically expecting like 10% earnings growth. So it's, a steep price for that. You've got the price to sales ratio at 14. I mean, it's like you're just trading at very, very high prices. But this is also a company where, and this is one of these things that I struggle with on these behemoths, where I look at Microsoft and I say, it's got revenue of $220 billion in the last year. Profit is $77 billion. It's not a company that you worry about going out of business in the next 1, 2, 3, 5 years. obviously I know in the tech world things can change, but Microsoft's pretty well integrated into our lives at this
Very
point.
strong moat.
And so if you have a company with minimal risk of going out of business, let's look at this from an investor psychology perspective. Just because earnings aren't growing as quickly as you'd like, does that mean that you sell the stock? I don't know, because it's historically, when you look at most companies, it's, okay, own a share in this company, and if earnings can go up, great, but this is also a company that could go out of business, because just about any company historically fell into that category. I mean, we've seen this over the last 150 years. A company like Microsoft, it's really hard to see them going out of business. Doesn't mean it's impossible, but it's hard. And so what incentive is there for a shareholder to say, yeah, you know what, I'm out of a company like this? Because the danger is, yes, the price could move against you, but if ultimately you say, hey, this is a company that's going to, make a boatload of money over time, maybe you're more of a price agnostic investor. And I'm not saying that's right or wrong, but it's something I've tried to reckon with these companies, because the big risk on equities is, hey, you wake up one morning and the company's worth nothing. The risk on a company like Microsoft of that is lower than just about every other company out there for a wide variety of reasons.
A company that's eclipsed $3 trillion in terms of its market cap. And the way I would view it is the same that you mentioned. It's a long-term hold, I feel like, for most people. The only argument you could make to potentially selling is that from a valuation standpoint, it's certainly got ahead of itself. Now, it's oftentimes justified, that valuation. It's up 70% over the last 12 months as a stock. So perhaps pruning the position may be something that you'd consider. But the idea that anything in this quarter would signify that you need to jump out of the company, to me, these are still very strong metrics that it's operating at, and there's a ton of promise on the growth side of things going forward that it's going to continue to do well. So this is one of those cases where you have to take a look under the hood every quarter, but nothing significant that would cause any real concern. I do wonder from an investment standpoint, we've talked about this a lot with AI, projections on revenue growth and earnings impact have gotten ahead of themselves from a valuation perspective. So that could be another reason that you say, hey, they're making a lot of progress, but this isn't really going to have material impact to the stock. Maybe I see a sell-off in the near term.
I mean, look, this is a stock that if you're trying to look at it in terms of, hey, how, if we're trading in line with the rest of its comps and the rest of the market, what does it look like? Yeah, I mean, in theory, it could be down 50 to 75% because it's trading It's trading crazily. But just because you say that could happen, it doesn't mean that it necessarily does. And I really struggle to figure out how to mentally handle a company that's this big and this profitable, because the tail risk is not that the company goes out of business, in the next year or two. It's just it's really, really, really unlikely that something like that happens. The tail risk is, okay, it sells off, but okay, I'm not saying so what, but I'm just trying to wrap my head around the psychology of someone who, could own Microsoft and how you handle this. I don't know what to do with it.
It's more akin to real estate, I feel like, in terms of the way you view it, because you have a very strong moat of products there. You don't look at real estate. You don't look at real estate every single day if you own a rental property saying, oh, it's, the Zillow estimates have changed 50 grand, 100 grand, whatever the figure may be. You view it as, this is something that produces me rental income, perhaps, and I know it's going to be there. It's in a desirable location. Same thing with Microsoft. This is a company that generates a significant amount of revenue. It has itself well diversified amongst video games, cloud computing, its Microsoft 365 products. It has a lot of different pipelines, so you view it a little differently. You can be more comfortable with that stock ownership. The valuation is going to fluctuate, but ultimately it still has a strong pipeline. Until that's dented, then at that point you get questions.
Yeah, well, and this gets it, I think, the question here, because with Microsoft, you're never going to necessarily, you're not going to question the profitability of the company. It's going to be what it's going to be.
Mm-hmm.
And so you say, okay, if I am someone who holds this, then one of the more important signals is price, because ultimately that's why, I'm owning it. And what you do say is, hey, if the price turns, maybe you start to get an awful lot of people who say, gee, why am I still holding this? And maybe that drives, kind of a cycle there that we've seen when, big tech has rallied, to these levels before. So I don't know what to do with it mentally. It's just kind of like, I don't know, these companies that are, almost too big to fail. What do you do with that in terms of the tail risk, and how do you manage that? I don't really know. And this also comes on the back of, if you look at the institutional wealth management side of things in the last year, hedge funds and mutual funds and things along that side, how many of them got killed by being underweight big tech last year?
A ton of them.
So it's like there's a career risk out there as well in terms of, hey, all these fund managers now are looking at this and they're like, hey, we tried to do the smart thing. These companies looked expensive, and so we said we don't want to own as many of them, and we got slammed because we didn't own as many of them as we should have. How does that factor in now as well, with these being as big of a part of the index as they are? It's something that it just is. It's not something we've really seen before, and so I don't quite know how to fit this into my framework for thinking about what these companies should or should not do. Let's take a quick break. When we come back, talk about the other one from yesterday, Google, their earnings, and why they're down 6% today.
Breaking business and financial news first throughout the day, only here on the Financial Exchange Radio Network.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
In sales, that was 11% increase. Revenue increased about 13% to 863 billion, or sorry, 86.3 billion. Didn't see my decimal point there in my notes. Missed on some of the sales metric expectations here, Chuck, on this most recently quarterly report. Some of the other standout pieces regarding Google's earnings in general, we did see cloud computing sales pick up 26% in Q4 here. That was after a disappointing Q3, and we also saw 24% in terms of operating income growth. The other thing that stood out to me is just how they've grown their subscription business. It's up now to 52 billion in annual subscriptions. That ties in with YouTube TV and Google One, which is their cloud storage division. That has grown 5 times over the last 5 years, so that's become a more significant part of their business, but declining a little bit just because they fell short on those sales expectations there.
What does Google do that's interesting today?
That's innovative?
Yeah, what's the last thing that you saw from them where you're like, oh?
I am really considering switching over to YouTube TV, but that's not innovative by any means. But
no, Tucker, anything excite you about the Googs?
No. Pretty, I mean, I guess the AI venture, but it feels like everybody's doing that, so no, it's kind of a snooze fest from Google.
I got to tell you, the search results, they're awful. They're totally gamed by companies and individuals using SEO to get their stuff to the top that has no relevance to what you're actually looking at.
You think it provides no assistance?
I think that the quality of search has declined meaningfully in the last 10 to 15 years. I think it's harder for me to find what I'm actually looking for now than it was 10 years ago. On top of that, Google pays Apple, $18 billion a year to be the default search engine on your iPhone? Mm-hmm. If it weren't for that, what's the reason why people use Google? I mean, is there any reason why it's better than anything else out there?
Brand recognition.
Because I'll tell you what, I switched away from Google last year just to see what it was like. I use DuckDuckGo now.
Yeah.
And first, I love ducks, which makes it great. And I love going, too, which is even better. But I found that the quality of search, you don't just get like the same 3 websites that have gamed the Google system. You actually get a better diversity of search results that are not just, hey, I'm looking for information on this pimple. Okay, here's WebMD every time. No, that's not it. Don't just give me WebMD that gamed it. Hey, I'm looking for information on how to make this recipe. Don't just give me whatever the main recipe site, allrecipes.com, because I don't want that. Give me different stuff, and DuckDuckGo does, and Google just gives me the same stuff over and over that's not relevant. It's just whoever has gamed the system best.
I push back a little bit. To me, I don't really find it that it's really dropping the ball from a search perspective. Typically, the searches that I'm running you're just looking for efficiency and for some sort of quick background, I would agree that if you're probably looking for a deeper analysis that you might have to page through and then you're struggling with Google. But if you're just looking for that quick fix, I'm not saying that DuckDuckGo couldn't do that, but it is, to your point, the reason that I just keep going back to the same well because I know it. But to me, I don't really agree as much with it falling off a cliff from a search perspective.
You a Google Maps guy, Chuck?
No, I've switched that as well.
To Apple?
To Apple, yeah.
Yeah.
The quality of Apple, so and I say this as someone who, when Apple Maps came out, I was the person who was leading the charge like, hey, this is terrible. You're like, it's an absolutely awful platform that one time when I was trying to go to a Cracker Barrel led me to someone's basement where there was no Cracker Barrel, by the way. I checked every corner of that house and there was no Cracker Barrel in it.
Hopefully you got a good breakfast in that basement.
No, the bacon
weren't arrested for trespassing.
The bacon was undercooked, quite honestly. I was not happy with it. And today I use Apple Maps and it is really, really good. Especially what caused me to switch there was when Google Maps changed their colors a few months back.
I didn't even notice.
And what with like all the weird pastels now.
Didn't even notice.
You colorblind?
No, it's always the same Google colors. I don't know.
It's not. It's meaningfully
Really?
different. Yeah, there was a whole uproar about it.
Did not notice.
People were very upset.
Do you guys use Waze, which is a Google subsidiary?
No.
I used to until they were bought by Google.
What? So clearly you have a bias here. You're not a Google fan.
So here's the thing. I know a couple buddies who work at Google. And you guys know what Google's original motto was, right?
No.
No.
It was don't be evil.
Mm-hmm.
They have like a 3-part motto now. Do you know what the third part of it is?
Be evil when advantageous to box out competitors.
Respect the opportunity. I mean, in 20 years, you went from don't be evil to respect the opportunity. Like that, just doesn't make you feel good. And on top of it,
like Apple is
what
some pinnacle of
they're not.
corporate virtue.
They're not. They're absolutely not. But the problem that I have with Google is what are they doing that's interesting in any way? They're just coasting on the fact that 20 years ago, people, for whatever, 20 years ago, it was better search because of how the algorithm was built. And now everyone's gamed it, and so I don't think that the quality is very good anymore. That's kind of where I've landed. They're just collecting rents based on decisions made 20 years ago. I think they are ripe for disruption, which is why the stock has struggled with all of this AI stuff going on.
No question, it's absolutely heavily reliant upon that advertising revenue. And anytime you're tethered to that, it is, I mean, they have such a huge market share that I'm not saying it's going to crumple tomorrow, but it's a little bit suspect. The YouTube acquisition was a fantastic one. I really think that was a very shrewd move, and it can't be undersold how pivotal YouTube is for younger viewers. It's something that's just core to how they consume media versus what we do, kind of the older school.
This also gets at the reason that I really dislike Google is more than any other competitor. They just buy up their competition and then sideline them like Waze. If we had a real competition between Waze and Google Maps and Apple Maps, oh my goodness, how great would that have been to see those companies actually compete on quality? And instead, Waze basically stopped evolving 10 years ago when Google bought them.
I mean, it's the same thing with all. I'm not saying that.
No, Apple Maps is like at least evolving now. Like
but Apple has done that with their business too. They've just bought things up or boxed people out as best
they
can. Yeah.
But Google, I think, is the worst offender. They bought DoubleClick, who was the biggest programmatic ad service in the world at the time. And they literally said to the FTC, we'll never be able to integrate this with our company, and so it'll be separate systems. And 2 years later, they're like, oh, we figured out how to integrate it. This is great. Like, yeah, we're Google. We're good. Google really bothers me because I'm not sure what they actually do today. Let's take a quick break. When we come back, we're going to be joined by Todd Lutsky for Ask Todd.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled, Can You Afford to Snowbird? Mike, people think about the big expenses when they're trying to figure out if they can rent or buy a place down south, but what about the smaller ones they need to account for as well that tend to add up?
Yeah, I mean, certainly when I'm thinking about buying a home down in Florida as the typical Northeastern experience, if you're talking about snowbirding, you're aware of the purchase price. You know you're going to have property taxes, but the other items do sneak up on you. We've been talking a lot about how insurance market in Florida has gotten a little bit crazy. Those costs get substantial very, very quickly. But other things as well, right? Just because you're not there doesn't necessarily mean you can cut out your entire internet connection or cable bill, or the fees for trash pickup might be built into the association that you belong to. And so really adding up all of these different factors is important if you're going to make a permanent shift like this of maintaining two properties.
And other things you have to factor in as well are travel to and from, and even travel while you're down there. Will you bring a car down there? Are you going to be buying a new one for that new location?
Right. Prepare to pay thousands of dollars each way if you plan on shipping your car back and forth, which honestly can be more affordable than owning two cars with the insurances and everything else that goes along with it, but you have to beware.
Our guide this month is titled, Can You Afford to Snowbird? And there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in mixed territory as Wall Street reacts to mixed quarterly results from Microsoft, Alphabet, and AMD, and also ready for a Fed rate decision at 2 p.m. At the moment, the Dow is up by 37 points. The S&P 500 is down by over 0.75% or 40 points. And the NASDAQ selling off by 1.5%. Russell 2000 off by 0.5%. 10-year Treasury yield pulling back by 9 basis points below 4%, now at 3.96%. And crude oil down nearly 2%, trading at $76.39 a barrel. Shares in Danish pharmaceutical giant Novo Nordisk are up 3% after the company reported sales and profit that beat expectations. The company's reported sales increased 37%, driven by sales of Ozempic and Wegovy. MasterCard shares up by 1.5% after the credit card company beat analyst forecasts, even as operating expenses grew more than anticipated. Meanwhile, Mondelez said sales growth slowed in the fourth quarter and said it expects even softer growth in comparable sales this year. That stock down by 1%. Elsewhere, Paramount Global shares are jumping by 10% after billionaire media mogul Byron Allen extended a $14.3 billion takeover offer. Allen previously bid $10 billion to Disney last year to buy ABC TV network, local stations, as well as the FX and National Geographic cable channels. And Walmart shares up by 0.25% after the retail giant announced a 3-for-1 stock split yesterday. And today, the company announced it is planning to open more than 150 of its large format stores over the next 5 years. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
We are now joined by Mr. Todd Lutsky from the law firm of Cushing & Dolan for Ask Todd. It's your chance to ask Todd any question you want about your estate plan. Really, it doesn't have to be your estate plan, but in any case, if you've got estate planning questions, this is the time to ask. Our studio line here is 888-205-2263. So get calling if you have a question that you'd like to ask Mr. Lutsky. Again, that number is 888-205-2263. Where else do you get to ask Todd a question without him sending you a bill? This is your opportunity right here. So again, 888-205-2263. Mr. Lutsky, how are you today?
I'm good, and I didn't say I wasn't going to send a bill.
Am I on the clock right now?
Yeah, I'm going to bill you for their questions.
Well, let's go to break. Todd, so before we get started, I do have something interesting that happened to me yesterday.
Yeah?
I was at the airport.
Airport? Traveling?
Airport.
Yeah.
Well, no, I was at the airport not traveling.
Oh.
My friend said, hey, let's disguise ourselves as luggage.
Oh, okay.
And I go to him, well, let's not get carried away.
That's a good point. I
don't
want to do that.
Let's talk a little bit about estate planning here, and specifically when it comes to being able to qualify for Medicaid in a long-term care situation.
Sure.
What does the state actually look at for that qualification?
So I think the easiest way to start this is to think about assets sort of in bundles, like a countable asset versus a non-countable asset. Now, it's somewhat easy because you're going to find in general, and I'll just give you a general rule, almost everything's countable. That's how you sort of start the premise. But you'll find that even last minute, right, which is really what this guide is all about this month, right? How do you protect things last minute when you find yourself stuck or faced with a nursing home admission? How can we convert these countable to non-countable assets, right? From countable to non-countable last minute. And that's the key. So countable, just about everything. Your house is countable, your vacation home, your rental property, your bank accounts, your brokerage accounts, your IRA assets. Yes, IRA assets. So couple of exceptions. One, at least the home. That's different than your vacation home. That's different than your rental property. Those are countable and lienable. The home, on the other hand, you can get some breaks with. If you're a spouse and you're the healthy spouse living there, doesn't matter how much it's worth, it's non-countable, non-lienable. So you wipe your brow and you say, at least I'm not going to get kicked out. Of course, it's not protected for the kids if ultimately the spouse gets sick, but that's another story. However, folks, a little different for a single person. So not only this countability rule exists, these assets are treated differently for single and married couples. So a single person, the house could be non-countable, but it depends. If it's worth more than approximately, and it keeps going up every year, it's about $1,033,000. If it's worth more than that and you're single, it's automatically countable and you'd be denied for Medicaid. Don't even bother applying. I mean, it's a hard stop.
Sure.
But if it's less than that and you check a box that say, I intend to return home, then it becomes non-countable but lienable. Okay, so at least they're going to let me get on Medicaid, which is a huge win because the rates are so different. But they're going to want to recover against the house. So you can see, and folks, we just talked about one asset. Obviously, I don't have time to go through every type of asset and how they're treated, but there are different treatments, and that's the lesson here. There are different treatments for each asset last minute, and you need to learn how that works.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. We call the segment Ask Todd because, hey, we got our phone lines open. It's your chance to ask Todd your estate planning questions. Phone number here is 888-205-2263. If you got a question for Todd, call that number. You get to ask him your question right here on the air. Again, 888-205-2263. One last time, that phone number is 888-205-2263. Quick break here. When we come back, it's right to your phone calls with Todd.
Ask Todd with Todd Lutsky every Wednesday at 10:30. Only here on the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. An extended nursing home stay could deplete your savings in months if you're not prepared. Cushing & Dolan, the experts in elder law, can help. According to Genworth, New England residents could see yearly costs of more than $200,000 in the next 10 years. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. Their new guide called Long-Term Care Planning for Procrastinators will help educate you on how to protect your assets so you can enjoy your retirement years. Learn about the steps you need to take to protect yourself and your family from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing and Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit DAV5K.Boston. You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
All right, let's get right to your questions with Todd Lutsky. First up, we've got Dan in Boston. Dan, what is your question for Mr. Lutsky?
Hi, Todd. My question pertains to a piece of property held in an irrevocable trust. If the owner of the trust passes away, does there need to be language in the trust to satisfy the mortgage before it would be passed on as to the beneficiary?
So this is a great question that actually is not really related to whether it's in a trust or not. So everybody listening should be able to perk up here, right? So let's talk first about this not being in a trust. When you die with a mortgage, it is considered a due on sale proposition, meaning there in every mortgage, there's a clause. They call it a due on sale clause, a due on transfer clause, meaning once this property is going to be transferred to somebody other than the borrower, right, it's going to be due on sale because they didn't lend to that person. So they're going to say, I'm calling the note, especially today. You probably have a very low rate on this note, and right away they're going to want to call it so they can refinance it at the higher rate. So if you die without a trust and your mortgage property and it goes to the kids, let's say, the kids now are going to have to go to the bank and renegotiate the mortgage because it's going to be a due on sale. Same thing with an irrevocable trust, right? So when the donor dies, remember, likely what happened was, even though it's an irrevocable trust, I think it's important to discuss how we even have a mortgage on an irrevocable trust, right? So likely what happens is when clients come in to me and their house is still mortgaged and we want to put it into an irrevocable trust, I tell them you have to reserve a life estate. Why? Because if you transfer the whole property, and it could trigger the due on sale clause. Now, I make these trusts grantor trusts for income tax purposes, and there is this banking rule called the Garn-St. Germain Act that actually allows you to do this, but I don't want to go down that road. So we always reserve a life estate. Now you can't trigger the due on sale clause. Great. So now my house, the remainder interest is in the trust, irrevocable, and I, as the donor, still own the life estate and am on the hook for the mortgage. Okay, I die. Well, now the house is owned 100% by the trust automatically because the life estate ended, and I'm dead as a grantor, so it's no longer a grantor trust, thus triggering the due on sale clause. And so the beneficiaries of the trust will likely have to go to the bank and say, hey, we need to renegotiate this once the bank becomes aware of the death. Long-winded answer. I bet you weren't expecting that from such a seemingly simple question, but great question, Dan. Thanks for the call. And folks, that's just what happens when you pass. But we are at the end of the month. This is the last chance to get this guide. For procrastinators, it's perfect. It's long-term care planning for procrastinators. So if you've procrastinated to the end of the month to get this guide, it's important. This is what happens when you die. This guide is about what happens when you enter a nursing home and you're not sure how to write the check, right? You could be writing a $15,000 check. Don't do that. Learn about how to make these countable assets non-countable last minute. Learn how they're differently treated for married versus single people. Learn how different assets have different treatment. Rental versus a house versus a vacation property. And what about, IRAs, bank accounts? Are there things we can do last minute to help somebody become eligible for Medicaid and get on the rate, which is a Medicaid rate way less than a private pay rate? And that's the leverage here, right? It's over 50% difference. Any event, end of the month, folks, last chance to get it. Call and get it, 866-848-5699 or legalexchangeshow.com. Download it there. One last time, 866-848-5699 or legalexchangeshow.com.
Todd, I got another one for you. Let's go to Mary in Reading. Mary, what's your question for Todd Lutsky?
Hi, Todd. My question is, if you put your home and assets into, I guess it would be a revocable trust,
okay,
and then you sell your home a few years later, do you have to redo the trust?
Okay, so
on the new property.
Fair. So you mean you're going to then buy a replacement home?
Yes.
Yeah, because it's always funny when you tell people we're going to sell the house and now you're homeless. That doesn't seem right, but you are, so you got to buy another house. So here's how it works. The quick answer is no. Okay, the quick answer is no, you do not. And let's explain it a little bit so people understand. So, and I think you can even expand this to include an irrevocable trust, because there's many people that have one or the other. So if you have a house in the trust, forget the mortgage or not, out of the property would go the house to the buyer, and into the trust would come the money. And that same thing would happen whether it's a revocable or an irrevocable trust, or at least the kind that we do. Because either of these are grantor trusts, you are not going to lose your capital gains tax exclusion, which you have to think about. I don't want you to pay adverse taxes because you're selling a house from a trust. In either of these cases, if you're married, and you're selling your primary residence, which, Mary, it sounds like that's what this is, you would get a $250,000 capital gains tax exclusion if you're single, and a $500,000 capital gains tax exclusion if you're married. And remember, folks, it's the $500,000 is on the gain, not on the proceeds. So you could sell for $1 million, but if your basis is $500 and the gain is only $500, the fact that you sold for $1 million doesn't matter. You got a $500,000 gain. You get a $500,000 exclusion against the gain. No tax. So that would work for both a revocable or an irrevocable. Now that we've got the money in the trust, what do? Well, we're going to buy another house. Okay, so the trustee then would transfer the money out of the trust to the buyer, and the buyer's attorney the seller's attorney would write a check. I'm sorry, the buyer's attorney would transfer the deed into the trust, right? So now the trust bought the house, so the trust would then own the property. Do you have to change the trust at all? No. I mean, if your trust says marry equally to the children, I'm just guessing that this might be what it says when you both pass, it will still go equally to the children. You don't have to change anything in the trust. Same thing with an irrevocable trust. Let me expand on that a little bit, because you might be saying, well, if unless you wanted the certain property to go to a certain person, well, then you might have to modify the trust to make that particular property go to that particular person. But think about it this way as well. That's no different than, let's say you've got this great stock portfolio owned inside the trust, and it could be revocable or irrevocable. And this stock portfolio, let's say you decide you've got this hand-picked selections of stock, and then you sell those stocks and you buy a whole bunch of other stocks. No, you don't have to change your trust. You've just changed the investment portfolio inside the trust. As long as who you want to get the assets hasn't changed, meaning your dispositive intentions, your wishes as to who gets what, I'm going to go on a limb across the board and say you don't need to change the trust ever unless you really change who you want to get, not what's in it.
Mr. Lutsky, thank you so much for your time today.
Always a pleasure. Thank you.
The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com.
Still more to come today. We've got a Fed meeting this afternoon, so we'll be previewing that in our second hour. Also talking a little bit about Boeing guidance and what they have to say about how the recent troubles with the 737 MAX affect their future financial outlook. We'll talk a little bit about hiring and whether or not there is a slowdown that is coming there. And then we'll also talk a little bit about cars in the auto market and specifically who won the title of the world's largest automaker in 2023. It's always a good thing to talk about there. I always find this one informative just to get outside what we're just doing here in the U.S. with cars. Quick break here. Hour 2 of the Financial Exchange is coming up in a little bit.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, LegalExchangeShow.com. Once again, simply call 866-848-5699, or get it from their website at LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi Code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
An extended nursing home stay could deplete your savings in months if you're not prepared. Cushing & Dolan, the experts in elder law, can help. According to Genworth, New England residents could see yearly costs of more than $200,000 in the next 10 years. So if you haven't done your planning yet, now is the time to call Cushing & Dolan. Their new guide called Long-Term Care Planning for Procrastinators will help educate you on how to protect your assets so you can enjoy your retirement years. Learn about the steps you need to take to protect yourself and your family from these high costs. If you or a loved one might need a nursing home, don't delay. Call Cushing & Dolan today at 866-848-5699 and ask for their new guide, Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Paul Lane.
It is Chuck, Paul, and Tucker with you here a little bit after 11 a.m. on the final day of January 2024. Kind of wild that we're already through the first month of the year. Tucker, you notice the days are getting a little bit longer already?
Yeah, a little bit.
Yeah, I'm feeling that vibe. I'm picking up on it.
Although
you know?
January's been a really long month. I don't know why.
Well, it's 31 days. It's the same month
Maybe
it usually is.
9 straight days of no sun is a factor in terms of
Have we had that?
our moods.
I don't think that's
9
been the
straight
case.
days.
Which days?
It's been cloudy every day for 9 straight days.
No, it hasn't.
Yes, it has. When have you seen the sun? I haven't seen the sun. 9 straight days.
Is that right?
I'm not making this up. It's 9 straight days we've not seen the sun.
I wouldn't knock it. I don't know about 9, but I definitely remember a lot of days of gray, cloudy skies.
I'm gonna check. There's an easy way for me to check on this.
Okay.
Are you gonna Google it or DuckDuckGo it?
No, I've got I've got solar panels on my house, and I'm gonna see if any energy was produced. It's an easy, efficient way to check whether or not it was sunny.
Yeah, your house is out of power clearly because the sun has not been out.
I
don't think that's how
on
it
the
works.
25th of January. I did 13.8 kilowatt hours, so it was definitely sunny then.
No, it wasn't. Wait, which day? The 25th?
25th.
That's
so that was
pretty
6
close
days
to-
ago.
Yeah, I didn't see the sun.
On the 27th, I did 10.5 kilowatt hours.
I don't know if that counts though. Maybe it's like light clouds.
What do you mean it doesn't count? No, when it's cloudy, you don't really get much.
Okay.
I
know better
noticed-
than I.
'cause,
with
like-
solar panels. All I know is it's been cloudy more often than not, and it's horrible. and I hate this month so far.
Okay.
Go ahead.
And with that,
You wanna
we'll
talk
talk
about
about
the
the
Fed?
markets. The Dow is up 46 points. The S&P is down 39, and the Nasdaq down 228. So we've got markets selling off aside from the Dow. couple culprits here. On the NASDAQ, you've got Google dragging things down. They're off about 6%. But the other thing that you are seeing today is that the banks are kind of getting dragged right now. And the reason why the banks are getting dragged, I mean, look, tech is kind of falling just because of Google and, some concerns about, hey, is AI going to be as hot as it, as we thought it was? But you've got banks being dragged today because of Silicon Valley Bank. Not quite, but here's what's going on. New York Community Bank Corp. You familiar with them?
Yes.
On March 19th of last year, they acquired about $38 billion in assets from Signature Bank, who was caught up in the whole Silicon Valley Bank blow-up.
Right.
And what we have here is a situation where New York Community Bank came out with their earnings this morning. And their earnings were not good, and quite honestly, there was some really ugly stuff in them. But the big thing that happened was they had a charge-off increase from $24 million in the prior quarter up to $185 million in the current quarter due to two loans. One's a multifamily loan, the other is an office loan. And everyone's freaked out about office because
we've talked about it a lot. Yep,
it's office. So I don't know that this necessarily means anything. Just like last year, Silicon Valley Bank didn't mean anything for the broader market. It was something that was a one-off. And if you went and said, hey, I'm selling all of my stocks because of Silicon Valley Bank and concerns about this, you missed out on an awful big rally over the next 9 months. I don't know that that's what happens this year. I don't have any idea what happens after this. But I think that what we are seeing, and that what I do find interesting, is that immediately after this is released, the 10-year U.S. Treasury takes a nosedive in yield down to 3.95%. It's down 10 basis points today. So all the focus was going to be on, the Fed and this and that, and no one's, moving before that. And now this has markets freaked out a little bit. And so you've got this sell-off happening on the banking side as well. I don't know if this turns into anything. I don't know if it's meaningful. All I know is that New York Community Bank Corp is now down 46% today. And so investors there certainly are not feeling good. And you've got, actually, New York Community Bank Corp now down 35%. It's rallied 10% in the last 15 minutes. So there's that. But I don't know where this goes or what happens with it.
Yeah, that one seems to have more, certainly that's more of a regional bank. So when you talk about the banks in general, the finance sector, if you take a look at that, financials are relatively flat on the day. But if you look at something specific like a regional banking ETF out there, certainly down on the day, about 3%, one of the ones that I was looking at. So that's always been the concern with some of the multifamily and office space loan, is that it's not gobbled up by JP Morgan, Goldman Sachs, and Bank of America. It's really split amongst private equity and some more of the regional banks as well.
Right, and you can see this just in how the financials are being affected today. So, again, New York Community Bank Corp down 35%. Citizens Financial, similar type of bank, down a couple percent there. But you've got Charles Schwab, which doesn't really do any of that stuff. They're down less than 1%. Right. So it's the type of bank is being factored in here. And what I will say, the big banks not being impacted at all. JP Morgan's up 0.25% today.
Right.
You might say, well, gee, why is JP Morgan? When people get nervous, like they move their money in that direction. It's, when you're too big to fail, that's just kind of how it goes. We do have a Fed meeting this afternoon, or rather it's been going on already. They're just going to tell us what they decided at 2 p.m., and then Jay Powell's going to put on the purple tie and talk to us all about that at 2:30. But when we look at the latest on Fed expectations here, we're now back to having a March cut priced in after waffling on that for a little bit. CME Fed Funds Futures currently pricing in a 62% chance of the first Fed rate cut now happening in March. Your thoughts, Paul?
Interesting. My question to you would be, that was sitting around 50-50 over the last day or two. What would make it upshoot, 10%? I don't really see any data that comes to mind that would really cause such a shift there.
Two things today, at least, if you're buying this as real, and I don't know that I am, because we still have a month's worth of data that we're going to get that's going to be way more important than anything we got today. 8:15 a.m., ADP comes out with their employment report, which some people kind of pay attention to, but it's it's kind of like if you watch March Madness, the people who pay attention to the NIT.
That's a good
like
analogy.
the ADP report is the NIT of
Right.
jobs reports.
I like that
That's
one.
kind of what it is. 107,000 jobs created versus expectations of 125 to 145. So a little bit light there. Another piece that the Fed does look at is something called the Employment Cost Index, which is exactly what it sounds like. What are we seeing in terms of how much it costs to employ someone right now? Previous quarter was running at 1.1% growth for the quarter, so a 4.4% annual rate. This one for Q4 that just came out at 8:30 this morning came in at 0.9%, below expectations of 1%. So you saw the cost of hiring new people, not hiring new people, but overall employment cost declined from a 4.4% annual growth rate to 3.6%, which means it's harder for inflation to be sticky if you don't have this big demand surge caused by more wages. So maybe those factor in as well, but I don't know. I mean, ultimately, the driver in this is going to be, hey, if inflation stays low, the Fed's going to cut. Like they're not going to keep a 3% spread between Fed funds rate and inflation if inflation stays low, just because they'd view that as restrictive in this case. Is that the right choice to start cutting? Heck if I know, but I don't wear the purple tie, so I don't have to have the end decision there. But if inflation stays low, the Fed has pretty much told you with their summary of economic projections, we think inflation long run is going to get back to 2%, and we think an appropriate policy rate for that is a 2.5% interest rate.
Yeah, we won't get any of those projections today. To be clear, that was from the last meeting. What we may get today is commentary on what the future looks like in terms of rate cuts. I'm going to predict we're not going to get a whole lot of anything in terms of commentary. It's in his best interest, Chairman Jerome Powell, to not really tie himself down to anything in terms of what to do in the future. I see no benefit to that and a significant amount of risk to make any of those declarations, as you do have 5 or 6 weeks here before that March meeting where you can digest further economic data. So to me, I continue to think about what would be the reasons to cut. You mentioned the biggest one, inflation coming down. I still have not seen any economic reports that really signified to me that the economy is slowing down. Perhaps we'll see what comes with this jobs report that we get on Friday that will break down, that we'll see a slowing in hiring, but everything has been quite resilient so far.
Yeah, and I actually misspoke. The March meeting is not till March 20th.
Yep.
So you're actually going to get the January data that comes out in February, and you're going to get a big chunk of the February data as well. So you're going to have 2 more jobs reports and 2 more CPIs before that Fed meeting. And that's going to be far more important in terms of determining what the Fed does
than
the employment cost index this
Right,
morning. Right. It's just that's how it is. Those are the rules of the road. Let's take a quick break. When we come back, we are going to do a little bit of trivia, and then we'll talk Boeing earnings in the shadow of the recent troubles with the 737 MAX.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators.
In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled, Can You Afford to Snowbird? Mike, one of the biggest decisions to make on this front is, should someone look into buying a place somewhere south, or should they look into renting a place somewhere south?
I'll tell you, it's funny to me, but it's so ingrained in our culture that home ownership is the way to go. It's the way to build wealth. It's just what we've all been trained on. And there are a lot of those benefits, especially for your primary residence. But I frequently see mistakes on the choice of home ownership versus renting when talking about a secondary property. And so there's a number of key factors to ask yourself when you're thinking about going to that second property as to whether you should own or rent.
What kinds of things have to go into that decision?
Well, I mean, first and foremost, how confident are you that this is exactly where you want to be? Because when you factor in the transaction costs of real estate, they add up quickly. And so if you make the wrong decision and 3 years from now you're relocating, it's going to be very tough to recoup your costs on that front. But how long will you be spending during the winter months there? Are you going to be spending the winter months? You can get a great deal on renting if you're on off-season or shoulder seasons. And so that can make things much more appealing. And then just quite honestly, what sort of person are you? Are you going to want to deal with the maintenance on a property that you're only visiting 3 to 6 months a year?
Our guide this month is titled, Can You Afford to Snowbird? And there are two different ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can go to ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited, dine in only. Well, today, believe it or not, is Justin Timberlake's 47th birthday. Timberlake recently announced his first world tour in over 5 years, and yesterday he added a second show to the Boston leg of his tour. In February of 2004, Timberlake performed at the Super Bowl halftime show, and the world would be introduced to the term wardrobe malfunction. Trivia question today: Justin Timberlake was performing with which singer during the infamous wardrobe malfunction? Pretty easy one here. Justin Timberlake was performing with which singer during the infamous wardrobe malfunction? Be the 9th person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 9th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, Boeing reported earnings prior to the bell. What did we see from them?
Their earnings report, Chuck, overall came in relatively well from a cash flow perspective and earnings perspective. However, really the whole conversation around Boeing centers around what they've been in the news for recently over the last couple of weeks from that January 5th accident where a panel blew out on an Alaskan Airlines flight. And to me, I almost couldn't get through the financials without just shaking my head as just to how poorly this company has been run over the last 5 or 6 years from a manufacturing standpoint with all the checks and balances in place. You would think with the increased scrutiny that these types of things wouldn't happen, but it's hard to justify continuing to be a shareholder in a company like this when the quality controls just seem to be an absolute abject disaster, Chuck.
I've said this multiple times, but the question that I have here is, we see an awful lot that, companies might do things that we don't like, but ultimately they end up making a boatload of money. And so, you can at least see the justification. Hey, I might not like, how Amazon treats its workers, but hey, look how the stock is done. And gee, why would I, how could I sell this? Like, you hear that from people.
Sure.
Hey, I might not like that, I don't know.
Apple was monitoring, my
location. I might not like how Facebook,
Target.
was, divulging information and blah, blah, blah. But gee, look at how much money the stock has made, right?
Yeah.
With Boeing, I look at it and I go, okay, so you're having these consistent manufacturing problems over the last 5-6 years, and the stock is at the same place it was at in July of 2017. So it's been almost 7 years and the stock hasn't gone anywhere. They've cut their dividend. There is no dividend anymore. What are large institutional shareholders looking at here in terms of keeping management on board? Because I'm trying to figure it out. And again, it's one thing where, well, this company does things that are kind of questionable, but look how much the stock is flat over the last 7 years. And for some reason, you're not hearing any kind of meaningful activist shareholder push to be like, what are you guys doing? We need more board seats, and we got to get current management out of there.
Yeah, Dave Calhoun took over the CEO of Boeing 4 years ago in the wake of those 2 deadly crashes of the MAX. And to your point, perhaps there needs to be some scrutiny at this. There has to be. I mean, there just has to be. You cannot continue to make these types of mistakes. So there needs to be at least consideration of leadership change if he's not going to fix it. He's had 4 years to turn around what was a sinking ship, and there's really no sign of progress there on the most important part of their business, which is the safety of its flyers.
Well, and the other thing with Calhoun, like, yes, he started there in 2020, but he's been on the board of directors there since 2009.
Right.
So he was even there when Boeing was making the decisions about the MAX to begin with, in a leadership role. And I don't know why Boeing shareholders are just cool with all this. Again, it's not like the company is making them boatloads of money. The stock has not moved. I mean, it's moved, but it's round tripped back to the same place it was at in the middle of 2017. And again, usually if you do that, even in a company that doesn't have these kinds of problems, your shareholders start to get a little bit itchy. I mean, think about how many CEOs IBM has gone through in the last couple decades. It's like every 4 years, we'll try something new again.
Yeah, why not poach an executive from Airbus and try and take on someone from an outside culture to bring it into Boeing to change things?
Well, this also raises a really good point that we talked about as well, which is there's been so much consolidation in the aviation industry. There aren't that many companies you can look to in the United States where you'd say, okay, like this is where you can, pull from. I mean, I guess, you can look at Raytheon now just because they pulled in, Rockwell Collins Aerospace a few years back in their merger. So, okay, you look at someone like them, but I mean, I guess maybe Lockheed Martin, they're still floating around, but they're more of a defense contractor than a commercial aviation specialist. So when you allow the amount of consolidation that we've seen in the American commercial aviation space, there is no McDonnell Douglas floating around out there where you can say, yeah, let's bring in, the chief operating officer from our big competitor and see how they do. And I think that just speaks to the fact that we have these companies that now are, the national champion companies where it's, hey, like this is, the U.S. airplane maker. You'd like to have more options than that. And not just on this, but also on the defense side of things to be able to say, hey, I said this on Monday, if I'm the U.S. government, I go to Boeing and say, you guys got to fix your stuff on the civilian side, and until you do, we're not letting you bid on any new contracts on the defense side.
Sure.
You got to do, the F-18 because you guys make it already. I get that, but you guys aren't bidding on anything else until you get your act together, because it's not going well there. And again, this is a Boeing thing. Like, you talk about Lockheed Martin just as an example. Lockheed Martin, mid-2017, the stock was $280 a share. It's $433 now.
Yep.
So this is not, a U.S. aviation or, aerospace or defense type thing. It is a Boeing problem that you are going through. Raytheon, middle of 2017, $76 a share, today $91. Not great, but 20% is better than.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be recouped returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing and Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing and Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
In honor of Justin Timberlake's 47th birthday, we asked the question, who is he performing with during the infamous wardrobe malfunction during the Super Bowl halftime show? That would, of course, be Janet Jackson. We all know that. Lisa from Branford, Connecticut, taking home the Financial Exchange Show t-shirt, and Lisa's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited, dine-in only.
Paul, let's talk a little bit about cars. Despite the lack of hype and basically, continuing to be steady Eddie kind of boring cars for the most part, Toyota Motor Corporation sold more passenger vehicles than ever in 2023 and found themselves in the top spot worldwide for units sold. Sales up 7.2% to a record 11.2 million vehicles.
Really strong year for Toyota, and Mike and I were mentioning this point yesterday where it's a company that has really not pivoted, but sort of ignored a lot of the EV buzz and speculation. Not to say that they don't have some exposure to it, but they were criticized often for not investing as aggressively in electric vehicles as some of its peers like GM and Ford and others have over the last couple of years. And GM obviously famously kind of walking back that approach recently, trying to cut down costs that go with it. And a lot of these auto manufacturers have pointed to the fact that at least domestically, there really isn't the demand that they anticipated on the electric vehicles. Toyota, I was reading a piece back in September of 2022 where an executive from the company was basically outlining that they weren't going to overinvest because different countries were at different levels of adoption, and the infrastructure here, which we've seen a lot recently, just wasn't there yet in the United States. And so clearly that bet to focus more on hybrids and kind of gradually develop electric vehicles has paid off well for Toyota here.
Now, this does come on the back of some problems that they are reporting. I'll quote here from Bloomberg. On Monday, the car maker suspended shipments of 10 models after an internal investigation revealed that one of its suppliers, Toyota Industry Corporation, has been manipulating test results to gain certification for its vehicles. So we'll need to see more detail on this. But look, we talked about the problems that Volkswagen had a number of years ago when they were basically faking emissions tests. This does not appear to be with regards to that, but we still need more detail here because there could be something that doesn't really sit right here. And this also comes on the back of, in December, another Toyota unit, Daihatsu, which does not sell vehicles in the U.S. but very popular for their pickup trucks internationally, they were found to have manipulated collision safety test results dating back as far as 1989.
Yikes.
1989. It's 35 years ago. I did the math.
Yeah, it's a long time.
Which also raises the question to me. I was under the impression, and look, maybe this is just how it's done in the U.S., that collision tests, I thought they were done by NHTSA or the IHS, like one of those two groups, and I thought they did it like as a third party who did this. Is that not the case internationally with Daihatsu? Like, do they just do their own collision tests? Or is it something where, the other question that I did have on this, and this would be really quite damning, are they shipping like fake trucks to the collision tests that are not, that are built differently from the ones they actually, ship out there? So I'll be interested to see what comes out of that, because there is a real problem there if you have yet another automaker. I don't know why this seems to be happening just left and right now in the auto sector, engaging in fraud there. It's a real problem. Folks, it is the 31st of January, and that means it's the last day of the month, and as such, it's the last chance to request the latest guide from Armstrong Advisory Group. It's titled, Can You Afford to Snowbird? And if you feel like Tucker, where you're just lamenting the 9 straight days of cloudiness and the fact that it was in the 20s this morning and it still is dark before 5:15 p.m. at night, well, then this is the guy that gives you the information so you can make an informed decision about whether or not you can spend a little bit of time somewhere a little bit warmer and brighter for parts of the winter. The guide is titled, Can You Afford to Snowbird? And it offers you some different questions to ask yourself so that you can make sure that you're prepared financially for whatever you decide to do. Should you rent versus buy? What's it cost to, insure a second place if you decide to buy? How are you going to get around when you're there? Are you renting a car? Are you going to be driving down? These are all things and more that you need to consider, and this guide has all of that information right in it. 2 different ways that you can request it. The first is by going to armstrongadvisory.com and then clicking on the monthly guide button. The second way is by calling 800-393-4001. That guide, again, is titled, Can You Afford to Snowbird? And the 2 ways to request it are by going to armstrongadvisory.com or calling 800-393-4001. Again, this is the last chance to request this guide. Tomorrow, it's on to a new one. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
So, yesterday, a little bit of a bombshell dropped regarding Tesla. A Delaware judge, and Delaware is where Tesla is incorporated, I'm going to quote here from the Wall Street Journal, struck down Elon Musk's multi-billion-dollar pay package at Tesla after finding the process for securing its approval deeply flawed in a major setback for the chief executive of the world's most valuable automaker. And I have no idea what's going to be the end result of this. This decision can be appealed to the Delaware Supreme Court, I believe. And I'll just quote a couple things from the ruling from the judge here. The process leading to the approval of Musk's compensation plan was deeply flawed, citing Musk's extensive ties with board members who negotiated his most recent pay deal. Musk was the paradigmatic superstar CEO who held some of the most influential corporate positions, CEO, chair, and founder, enjoyed thick ties with directors tasked with negotiating on behalf of Tesla, and dominated the process that led to board approval of his compensation plan. The reason that this was even a question was because you had shareholders who, after the fact, said, hey, this is going to be hugely dilutive to us as shareholders if he just receives all of these additional shares. We don't feel that the board was looking out for shareholders and instead was looking out for Musk. And so I don't know where this ends up going here, but at this point, this pay package, about $55.8 billion, which represents about a quarter of Elon Musk's Tesla holdings, the company is pretty much being ordered to, you guys got to undo this most likely, and I don't really know where this goes from here because I've never seen something like this.
It's extremely rare, as you point out, to have this type of decision come out in the Delaware state courts. In 2018, a Tesla shareholder did ask for Delaware Business Law Court to cancel the deal, alleging that the Tesla CEO had controlled the approval process and really not been forthcoming as to what the stipulations of the deal were. So it will be really interesting to see if this gets appealed, how it shakes out in the court system, because to re-emphasize here, it's just very rare that you see this happen with the CEO's compensation package.
This is from Charles Elson, who's a corporate governance expert at the University of Delaware, so very well versed in Delaware law. Rarely, if ever, does a Delaware court rescind a compensation agreement. To my memory, it hasn't happened. So I'm not going to pretend to know more than Charles Ellison because I've never seen any of this before. The reason why a lot of companies tend to incorporate in Delaware, very flexible laws in terms of business formation, being able to add new shareholders, some tax benefits and things like that for companies that are headquartered there, or registered there, even if they're not, conducting their operations there. So you often see a lot of companies that are Delaware companies, even though they don't have any meaningful operations there. Musk did then tweet out afterwards, never incorporate your company in the state of Delaware. So he's obviously not thrilled at potentially losing $55.8 billion. But this is uncharted territory, so I don't know where this is going to go. I don't know who's right or who's wrong, even though this is the initial decision. I'm going to kind of withhold judgment on this because I don't know. And this is not something that any of us do because even Delaware corporate governance experts don't really know what to make of this because it doesn't happen. Let's take a quick break here. When we return, we'll do a little bit of stack roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Veterans Development Corporation is a proud partner of the DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with the Disabled American Veterans Department of Massachusetts and the presenting sponsor of the DAV 5K Boston. If you'd like to help our great American heroes by making a donation, visit dav5k.boston.
Are you thinking of spending the winter season as a snowbird? If so, you'll need to put together a strong financial plan to make it happen. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're getting ready to retire or already there, it's important to take a closer look at your current income sources and expenses to determine whether there's room in your budget to live that snowbird lifestyle and remain as financially comfortable as possible. At the Armstrong Advisory Group, let us work with you to create the kind of strategy that may help you maintain your existing expenses even while you're snowbirding. Call right now at 800-393-4001 and ask for Armstrong's new free guide called Can You Afford to Snowbird? Once again, that phone number is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. With winter in full swing, it's time to start thinking about the sun and the fun of the U.S. Virgin Islands. St. Croix, St. Thomas, and St. John are unique in their own special ways. Go to visitusvi.com, learn more, and plan your next vacation in the hotbed of the Caribbean. You'll enjoy perfect weather, incredible beaches, world-class cuisine, a wide variety of water sports, and the calm and relaxation that you deserve. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Don't let an unexpected nursing home stay take away your wealth and prosperity. Cushing & Dolan are experts in elder law, and if you're not prepared to handle the increased costs of nursing home care, your assets may be at risk. According to Genworth, the average monthly cost for a private room in New England could double by 2040, so don't delay. Call Cushing & Dolan today and request their new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn strategies that can help you protect your assets and allow you to enjoy your later years. Don't put off today what you might really need to do tomorrow. Call Cushing & Dolan right now at 866-848-5699 and get your free guide called Long-Term Care Planning for Procrastinators. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, the sun, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Paul, what do you got for me for Stack Roulette?
23andMe's fall from $6 billion to nearly $0. 5 years ago, 23andMe was one of the hottest startups around, where they allowed for people to do genetic testing to go back in their history to get a better sense of their ancestry. And the focus of the company was really to try and provide consumers out there with a better understanding of their genetics and their health situation. And then their hope as a company was to take all of the 10 million plus samples that they had of DNA and build out some drugs from scratch, which is a really expensive and capital-intensive process. To this point, the stock is trading at less than $1 and risks being delisted from the NASDAQ. It's been a really rough go. The founder of the company, it's Ann Wojcicki, who has been noted in many different publications, Forbes and otherwise. I believe she was on a Shark Tank episode as well, has been a cavalier entrepreneur, but really could be running out of time here because she can't really raise capital by any listing of shares, and she's not getting any more investments from their existing investment board.
So I'm trying to figure out this company, and again, the Wall Street Journal kind of gets at it very cleanly, which is they didn't really develop a business model to encourage any kind of repeat customer, because once you have your DNA tested,
doesn't change.
You're kind of done.
Yeah,
like that's it. And so, what's the reason for someone to ever come back to you? And I also found that a lot of these were a lot of times just given as almost gifts, you know, like
yes.
how many people do you know who said, oh, like, I'm going to give this to my parents so they can, like, find out where they're really from.
Mm-hmm.
And, okay, that's great, but that's not really building any kind of long-term business or long-term platform. And so I think that obviously is something that you wonder about with this company. Look, clearly it's something that they got 6.9 million customers, so I'll give them credit. I mean, it's not like nobody bought this stuff and no one, spent money on it. But how do you continue to? Because it's, again, kind of a dead end from a pricing perspective. Like, I'm looking right now, and first, it's not cheap.
I think it's about $400, right?
It's $119 right now.
Oh, okay.
So you get, and that's for the Ancestry service. So it, helps to build your family tree and blah, blah, blah. Well, $119 just to know that, like, my family's from where I think they're from. A lot of people have to put food on the table.
Mm-hmm.
Then if you want the health stuff, so understanding your genetic risks, it's $229. Again, like, it's not cheap. And then you get to
super duper
another one here, which is they just came out with this because, again, I guess they realized that, hey, we need some recurring revenue. The 23andMe Plus oh, gee, they just couldn't.
Is that a streaming platform?
It's yes, you get your DNA on TV. 23andMe plus Total Health. I'll quote here, and again, this it just sounds blah. Detects 200 times more disease-causing variants. Okay, so if this is really such a big health thing, then why are you not just including those in those other products? Everything in 23andMe plus Premium plus clinical grade exome sequencing, biannual blood tests, a dedicated virtual consultation with clinicians who are trained in genetics-based care, unlimited messaging, and personalized recommendations based on your results. $99 a month. But it's not really not. Here's the small fine print. Billed as one payment of $1,188 a year.
Wow.
Which to me says they need the money now because they're not even offering the ability to pay monthly.
Sure. Ooh. Tough
So
go.
Look, I have a buddy of mine who is very into, he works in biotech, specifically with genetic testing. And look, these guys do fine. Like, they do good work and everything. Like, he doesn't have anything to say about, the quality that you get from them. But ultimately, it's something where if you actually need, some kind of medical care, you're going to your doctor for that. 23andMe does not, they don't provide medical care.
Mm-hmm.
And if you're having a problem, you should probably go to your doctor before spending $200 on the internet also.
Sure. And ultimately, this idea of developing drugs from this source of information that they have, that is just a really uphill climb. Really tough.
And can we just stop attaching the plus symbol to
No,
everything that we do?
I don't think that's going to end.
When I come out with my streaming service, it's going to be called Chuck Minus.
That's not going to get a lot of support.
And the tagline is going to be, no, listen, I've got it all. The tagline is going to be more for less. And that's why we went with the minus.
Interesting. Efficiencies.
If I were Walmart as an example, Walmart's whole thing, what's their tagline? Always low prices.
Yeah.
Always.
Yeah.
I would have gone Walmart minus because it's always low prices. Walmart plus, it sounds like you're trying to sell me more. I want less.
They want to sell you more goods, but
they do. But you want to make it sound like less. Maybe not Walmart minus. How else could you phrase it? That's Walmart cheap.
Walmart deals.
Yeah, like something other than plus. We just have to get. I mean, freaking OPEC just slapped a plus on their branding.
Yeah. I mean, I think they were the first, weren't they?
They were I think they were right after ESPN. I'm just waiting for the NCAA and the IOC to get on board, and then we really got everyone doing it. Oh, we got the NCAA plus. Well, what's that? Well, we don't know, but you still can't pay your college athletes how much you want to pay them. Oh, okay, fine. Even though I will say, the latest proposal from the NCAA to improve the pay of college athletes, I was very interested in. That was put forth by none other than Charlie Baker, former governor of Massachusetts, and we'll see where that ends up going. Let's take a quick break for the rest of the day. We're going to be back at it tomorrow. We got Jay Powell speaking today at 2:30, so we'll recap that and all the Fed news tomorrow on the Financial Exchange.